this one, I believe, is going to be more educational. What is cryptocurrency and stablecoin? What are the different types of assets? How do we use it? What are the regulations? What are other credit unions doing? So I'm excited about the topic, and we have actually brought on some specialists that I am honored to introduce to you. This topic came up at our conference this year, and this was one of the top 3 things that were keeping CEOs up at night. So this is why we wanted to have this session to really look at it from the ground level and assess what is it, how does it impact credit unions, and what do we need to do about it. So with that, I want to introduce our presenters. I'm very honored to have these presenters with us today. You guys probably recognize Marilyn from the conference and Jacob as well. And again, this one's going to be a little bit different, so it's going to be more educational. And so with that, Marilyn, I'd like to hand it over to you if you'll please introduce yourself and give us a little bit of background.
Sure. I'm Marilyn Barker, and I lead the compliance team at America's Credit Union. It's an honor that I've had for a year now. It's a relatively new industry for me in terms of it being focused on credit unions, but I have over 30 years of financial services experience and expertise in anti-money laundering regulation, as well as payments, the two combined together. And it's an area where I'm always learning. And so this is another expression of just new developments, legal developments, and regulatory developments in the industry. And I'm really excited that the United States, for the first time, is going to be poised to, to bring on regulation with respect to comprehensive regulation in this space. So it's long awaited. So my pleasure to present to you today. Thank you. I will turn it over to my colleague, Judy Don.
Thank you so much, Marilyn. As mentioned, my name is Judy Don, and I'm a federal regulatory compliance counsel with America's Credit Unions. And in my role, I primarily focus on the regulations. I assist credit union members with a variety of compliance issues. It really spans across all consumer finance regulations. In addition to that, prior to my role with America's Credit Unions, I worked in compliance and legal over at Rocket Mortgage and had some experience working on their examinations, on their operations, and focused on mortgage origination. So it's a pleasure to be here as well.
Happy you're here, Judy. Thank you. And Jacob?
Hey, good afternoon, everyone. So happy to come and share a little bit about Stablecoin and some of the work that I've done there. I've got about 30 years in SaaS, 20 of that in fintech. Used to work a lot, very closely with organizations that we probably all are aware of, like the CFPB and the OCC and the Department of Justice, particularly early on in my work at Wells Fargo for electronic signature, electronic transferable records, digital accessibility for people with disabilities. And so I have a wide range of new innovations, including about 1 in 8 US households still has digital products that me or my team brought to market. So excited to talk about stablecoin. Just as a quick footnote, I've been with Self-Help for 6 months. I am still ramping up to understand the unique nature of members here and their preferences and desires. But I know we're excited about the potential of stablecoin, and so I'll be sharing some of that today too.
Wonderful. I think we've got the right group. Well, then what I would like to do, Jacob, is really hand it over to you, because I think before we can get into the logistics of stablecoin, I really want to look at understanding the different types of assets. And before we jump into that, I'd like to take an audience poll as well. If you'll just put it in the chat, which statement best describes cryptocurrency? Now, don't get embarrassed. Just put what you believe your answer to be. And then you guys know the drill. We'll ask that same question as well at the end after we learned a little bit. So if we can just be dropping those in the chats, that would be great. Our takeaways that we're going to look at, of course, is what is stablecoin? Why is it important in the world. Why is stablecoin being used across not only the globe, but also now in the United States? I looked at a recent statistic that said that over 50% of Americans use stablecoin, but only about 1% with payments. But outside of the United States, the statistics are much different. And I want to really talk about that and understand stablecoin and the impact it is globally. We'll look at the Genius Act. We'll look at compliance and regulatory considerations. And then we also have a lot of resources that our kind panelists have provided. So we'll be sharing after the Spark session some resources that you can use and some guides and tools that'll help you along the way. So with that, let's start at the top. And Jacob, I want to pass it over to you to understand the types of digital assets that we are looking at.
Yeah, I just wanted to make sure that we had a solid foundation of just what we're talking about here today, because there's a lot of new innovations in the payment technology. I think the first and most simple way to think about stablecoin is it's just another digital asset. There is some very unique qualities that we'll be getting into today, but when you think about what does this actually mean within payments, it's like just a non-tangible asset that has a value tied to some type of currency. What's unique about stablecoin is it's a fiat backed currency, which means it's going to have a pretty much a stable one-to-one value to the US dollar. So when I kind of think about these, whether they're new technologies, new digital assets, whatever the capability might be, I like to always do a risk over, value understanding. And so this kind of graphic here is to help the audience kind of see where stablecoin lands within the spectrum. So when it's, a fiat currency in general, since it's backed by a US, going to follow the trajectory of the dollar. And so from that standpoint, the risk is going to be fairly low and the value is going to be extremely stable. When you get into things like commodities, things like, oil, treasuries, gold, obviously the risk of there is pretty stable. It's got a long tradition in terms of like where its value or where it's like risk and change happens, but its value is slightly sometimes perceived a little bit higher than what the US dollar might be. When you get into newer things like algorithmic or crypto types of ways of doing digital assets, what you're trying to do is really make market differences and distinctions. And these type of approaches to digital assets tend to, in my opinion, kind of benefit fewer people than mass market. And while the value can, if you hit them at the right time, be very beneficial, the risk is extremely volatile for those. And so there are organizations who have used stablecoin prior to the Genius Act being in place and some more of the regulatory scrutiny, which we're using more algorithmic approaches to stablecoin. And so I'm sure folks on the call have heard about some of those kind of Mary Poppins run on the banks aspects, because they actually weren't backed by the US dollar. And so it's really important to understand as you're kind of digging into this, like, is this the Genius Act fiat-backed kind of version of stablecoin, or is this a provider that's doing something in the algorithm of the crypto? It doesn't make those bad or evil or wrong. There's just different risks involved with them.
Let me ask you this too, Jacob, because I think what I struggled with was if stablecoin is backed by the US dollar or backed by gold or any other commodity or crypto, why not just use the US dollar? Help me understand what's the international impact. And I don't know if this is more for you, Jacob, or Marilyn, or maybe both of you. Why are we seeing stablecoin here in the United States, would you say?
Yeah, I think if we want to slip to the next slide, I think this starts to kind of bring some to this. And I think this is an important component in whether we're talking about stablecoin or a new digital technology or even a new process for our credit union, whatever the situation is, I think it's always important for leaders to assess what problem am I trying to solve and how much value am I creating in that exchange. And so in that regard, like when you think about the benefits or what's unique here about stablecoin is you're talking about something that can transfer very seamlessly with low friction. It's got low risks in terms of actually having that like commodity on you, on your person, right? So it's tied to the technology aspect. It's trackable, it's traceable. But you're going to get things like the benefits the US dollar does. Like it's going to to have a fixed value that's pegged to it. It's going to be extremely quick. When you think about folks that are in high risk situations, it allows them to move money, I think, very easily. Perhaps if they are underbanked, or they can't get an account that's open. So it kind of broadens the market. One of the things that I find that's most intriguing about this is it starts to break down, and we'll see this, I think, later in the presentation, some of the ways that money can move across borders. And so when we want to actually, have people that are supporting family members in other countries or other places, it becomes a lot easier to move that money. It doesn't mean it's like susceptible to more fraud and kind of one-to-one, but like it allows our individual members to get money back home, where they're trying to actually send those funds, and for low cost. So there's been a lot of noise in the market recently about interchange as well. And so I think one of the things, small business leaders are always mindful of is like, I gotta pay like the network fees are getting, up to like 3% average. Banks got to hit on that. And then you have things like the POSs that are going to be adding on to those interchanges too. And now you see a lot of small businesses passing those costs on to the consumer. And so it's this weird, like, kind of evolution in terms of the payment process areas. And some people, like our youngest generation right now, is actually going more back to either peer-to-peer or cash, actually. So if you go look at recent stats, they're not using things like cards and things of that nature. They're kind of going to these P2P payment options or to just cash because it's less expensive.
Yeah. I was just going to add to his comments. This whole industry really has been advancing in spite of the United States reluctant to sort of grab it from a regulatory perspective. And namely because other currencies around the world are very unstable. So
Yes.
this is one way to ensure that you have that stability, because if you're exchanging like huge dollar amounts or whatever the local currency is, that could actually be quite costly if you have all the conversion issues to worry about. So having a stable coin like payment vehicle is going to be more meaningful. And then if you're running global operations too, it's almost like you have like this one like universal currency that's digitized, right? And then you don't have to worry about just the huge money movements that could be an issue. Maybe overnight you can see some political instability happening, like what we had in Venezuela, and maybe with these type of digital currencies in general, you can move it quickly. You don't have to necessarily go into the bank and withdraw your money. You can move it quickly. And if you're living in some of these countries abroad, the concern is too, you really want to have a little bit of anonymity as to who owns it, because maybe you might end up being a kidnap victim, or maybe if the government doesn't like you and they want to just take your money, they'll declare that you've been engaged in money laundering falsely. I've actually seen that happen before. So then, this is one way for people to, number one, conduct commerce on a global basis, but also for those high net worth individuals, it's also a safe way for them to move their funds around. And if you think about, to give you another analogy where it would be somewhat similar, like in Macau, for example, the Chinese really love to gamble. And so when they come to the United States, they can pretty much not have to worry about conversion necessarily. I mean, that's what they're doing. But if they have something like digital currency, they don't really have to worry about it as much if they were using like dollar-based transactions or one-based transactions. So there's great utility certainly in money transmission area as well. If you have global operations and you're like navigating in a bunch of currency, so that the whole notion of currency risk is a huge one that you have to factor in your risk management and determine your risk appetite for it. So this helps stabilize that too. And in fact, like the company that I was working for a couple of jobs back, it was a UK-based remittance company. So Circle, which actually does a lot of like
Yes.
digital currency, wanted to come and invest in our company, but we realized that they were basically trying to figure out how we operated, right? So to get down to the nitty-gritty of our operations, because they knew, eventually this adoption would be forthcoming. So there's a lot of great use cases.
Oh, thank you, Marilyn. Yes, I wanted to touch on that, and I know later you'll kind of tell us a little bit about the regulations and how to implement this from credit unions. So I appreciate that.
I think the last thing I think I have just here as a setup is this isn't like new. It didn't like open up the doors like yesterday. So stablecoin actually was starting in 2019. So we're 6 years in at this point, almost 7. So
Right.
this is one of those kind of opportunities to say, yeah, we're hearing a lot more information about it. There's certainly more entities getting involved in it, but it's out there. So to give you an idea, like this isn't like in a corner. And we don't have a poll up for this. I actually probably should have caught that, Jamie, but I'll just give the answers out. So in a given month, there's about $3.5 trillion moving through stablecoin right now.
Wow.
There's about 100 billion a day. And the top like asset holder of this Tether has more in stablecoin than Charles Schwab has in value overall. So in terms of just overall impact, it's out there. And these are some of the big players that were like first in. And you're getting kind of different kind of angles here. You're definitely getting kind of high-end luxury products. You're getting kind of middle market like technology aspects from Newegg. But then you're getting kind of lower cost but high frequent uses, through movie theaters and things like that. What I like the most is when you get something like Shopify in here. This is what I'm talking about with foreign exchange rates, like interchange rates, foreign exchange rates, they're all under threat because the type of margins on this stuff is all going to go away. Like you're just basically trading cash at this point.
Very good point.
That is I'm blown away by those numbers. I think that I can only imagine what it's going to increase to once we have the Genius Act and the final rules set forth, because it's only going to open up the floodgates for financial institutions to step into the, playing field, essentially. Even though, as you mentioned, Jacob, there have been some other institutions who have already dabbled in it a little bit. Now with these regulations coming through, it's only going to get larger. So I think that's a perfect segue into the Genius Act. I don't know if you have some type of transition, Jamie, but I'm just going to jump
just
right
real
in.
quick. I did see a question from Samantha. I don't know if that was, for the foundational stuff or yeah. Okay.
She may have just had her hand up. We do have a question from Greg real quick before we jump in. Is the blockchain security angle at risk in the future with AI and supercomputers that could possibly unlock the crypto assets? I don't know if you touch on this later, Marilyn, but if anybody
No, I don't
wants
get
to jump
into,
in.
yeah, I'm looking at it from an AML transaction monitoring standpoint and not in cybersecurity. But that's one of the advantages, though, of the blockchain, is that, in that it's immutable and it's less prone to breaches. So I think that's somewhat responsive to the question. But there's nothing that's foolproof ever, right?
Yeah,
Right.
that's a good question. All right, so real quick, I do just like to always start with a little disclaimer. Anything that is discussed during this webinar should not be construed as legal advice. So for anyone looking for those types of services, you'll definitely want to reach out to your counsel. So with that, I'll just jump right into the Genius Act itself. It was signed into law in July of last year. It's the first federal law to create a regulatory framework for payment stablecoins. And I want to emphasize payment stablecoins because not all stablecoins are created equal. We're talking about, and Jacob was going into a little bit more just about the differences in cryptocurrencies and stablecoin. But under the Genius Act, they've created a payment stablecoin definition, and that definition is that it's a digital asset designed to maintain a stable value by tying their price to a reference asset, such as the US dollar. Sounds very similar to just your typical stablecoin, but under the Act, a payment stablecoin is used for either payment or settlement and is redeemable for a set amount from the issuer, who is required to maintain a reserve equal to the value of the payment stablecoin, and that is going to be determined by your primary regulator. So in short, Payment stablecoins are going to be used to buy goods, to buy services, make other payments of that nature. I know we've already touched on it a little bit, but it's going to be redeemable instantly. So let me get into a little bit more about who can issue stable coins, because I think that's important to address. The Genius Act restricts the issuance of payment stablecoins in the U.S. to permitted payment stablecoin issuers. You're going to hear me refer to them as PPSIs. So there's going to be three types of entities or three types of PPSIs who can issue stablecoin. First, and most importantly, you're going to have your subsidiaries of insured depository institutions, such as your credit union service organizations or QSOs. Second, you have federal qualified non-bank payment stablecoin issuers. Those are going to be those approved by the OCC or the Office of the Comptroller of Currency. And then finally, you have state qualified payment stablecoin issuers approved by your state regulator. So in addition to who can actually be a permitted payment stablecoin issuer, the Genius Act also requires that PPSIs, they have to maintain reserves on a one-to-one basis. And this kind of goes back to the stability of, you hear stablecoin and you think stable. Not all stablecoins are created equal, but under the Genius Act, payment stable coins are going to have that reserve of a one-to-one basis, meaning they must hold at least $1 in safe, highly liquid assets for every one payment stable coin they have. Now, this requirement, again, it's meant to ensure that the stable coin maintains its value and can be redeemed for cash immediately on demand. So a lot of us are probably thinking, what does this mean for credit unions? So federally insured credit unions can custody stablecoins as assets for their members. And through a subsidiary, such as a QSO, they can be approved as a payment stablecoin issuer. Now, the Genius Act does provide that the appropriate federal regulator, in this case, the NCUA, shall receive, review, and approve applications from any federally insured credit union that seeks to issue payment stablecoins through a subsidiary. So I know I'm kind of, going through things at a 30,000-foot level, but you have who can be a issuer, a permitted payment stablecoin issuer. Now you have, what does that mean for credit unions? What can they do? They can custody payment stablecoins. Let's talk about, if you want to go to the next slide, we can discuss the regulators and where we are at with the implementation of the Genius Act. So you have the NCUA, of course, along with other federal payment stablecoin regulators. They were all tasked with implementing the provisions of the Genius Act. Specifically, these regulators, they're required to establish a process and a framework for the licensing, regulation, examination, and supervision of the PPSIs. Again, permitted payment stablecoin issuers. So first, you have the OCC. They're going to act as the primary regulator for national banks, federal savings associations, and federal branches of foreign banks. You also have the Fed, who serves as the main regulator for bank holding companies and certain depository institution-related issuers, such as state member banks. You also have the FDIC. They regulate stablecoin issuance through insured state non-member banks or savings associations. You have the Treasury. They play a role and set principles for regulators and state framework, while FinCEN develops the tailored anti-money laundering rules for payment stablecoin issuers, since they are treated as financial institutions under the Bank Secrecy Act. And then, most importantly, you have the NCUA, and they act as the primary regulator for payment stablecoin issuers. They are the regulator for the subsidiaries of credit unions or federally chartered credit unions. So let me give you an example real quick. you have a credit union service organization that is a subsidiary of a credit union. That CUSO is a permitted payment stablecoin issuer. The CUSO would then be regulated and examined by the appropriate federal banking agency that regulates the insured depository institution. So in this case, it's going to be the NCUA who would supervise and examine the CUSO with respect only to its stablecoin issuer activities. So I'm going to pause for a second. I know I'm going through just bits and pieces of the Genius Act. We could probably be discussing this all day if we go through the details. I would like to get to the implementation of the Genius Act, but like I said, I'll pause real quick if anyone wants to ask any questions. If not, I'll keep talking.
Judy, I'll just add one footnote, and maybe you might get to it, but I think it's also valuable to understand that the assets that need to be held to back the stable coin cannot be used to lend against. So they have to be completely like reserved for the valuation. And
that's a good point.
Yeah, and that's where some of the like Terra got into a lot of trouble, is that there was like this idea that they were backed and then they were lending against it and using algorithms to try to predict the future of the value. And then it got to nothing. They didn't have the reserves because it's not FDIC insured, the stablecoin.
Right. So I don't get into that in detail, but that's a really good point to bring up, those reserves. I mean, and that goes towards, you have these regulations that are coming through that are not final yet, but, it really wants to open up those floodgates to consumers who might be a little apprehensive of, let's say, Bitcoin or these other more volatile digital assets. So I think it's important for credit unions and CUSOs and all those involved to realize that, you do have those reserves that must be backed, but they have to be kept separate. You can't commingle, if you want to use that word.
I think that probably is going to be one of the biggest challenges, though, because unless there's some sort of secure way to make sure you can manifest those reserves, people will say that they have reserves, and then if they're the ones controlling it into the bank account, you'd have to have it in a way that they wouldn't be able to have access to the reserve, right? Because then they could use it to commingle. And how would you know that? I mean, you think that you have a secure asset when you really don't. So there has to be mechanisms in place to make sure that they were not able to go in and touch it if it's going to be used in that purpose to be a reserve.
I agree. And we've got some questions in the chat as well. If we want to hit some of those. And Jacob, thank you. I see that you've been replying to some. So Rob asked, is this similar to the old days when any bank could issue currency?
I think that predates me. I don't remember that.
Yeah. But I do in this way. Go ahead, Jacob.
I answered a little bit in chat, but there have been concerns that have been raised by some folks running for office and then others. But in general, what Judy went through is that anyone that is going to be able to issue these is susceptible and has to comply with regulatory oversight on them. So they're going to have to report. They're going to have to be regulated. It's not like a whole like how it was
free
before.
For all.
Yeah, free for all. But these are kind of the normal, and I think they're healthy questions to raise up to force the conversation. But no, I don't think we're looking at that.
I can't see the chat, but if there's additional questions that aren't yet answered, we can definitely go through those, Jamie.
Sure. One of them was these are referencing banking regulators. There are other regulators such as the CFTC, etc. Marilyn put that on there. Perfect.
Yeah.
Okay. Well, I
just
say
to
let's
let
go
you
to the
know
next.
that it's a broader regulatory focus. And CUSOs are kind of like in the middle, because then on the one hand, they definitely going to be regulated by the underlying banking regulation, but they may have other parties for which they have to answer to. Obviously, she mentioned, FinCEN as being one of them for anti-money laundering regulation, but there could be others too as well. So, but in terms of sort of like the securities aspects of digital currency, the CFTC has been chosen as the appropriate regulator as opposed to the SEC. Although it would make sense to have the SEC be there, because the current chairman at the SEC came from that world, Commissioner Atkins, who I know personally. I used to work at the SEC, and he's brilliant, number one, but he's a really big proponent of crypto in general. And also his protege, who's also Commissioner Hester Pierce, is also equally, fond of the industry. So it would have been nice to have those two people. But the other benefit is that Chairman Hoffman is going to be going over to run the CFTC. So we have somebody who understands credit unions running, the sort of sister agencies, so to speak. So I think those are interesting developments.
That's wonderful. Thank you, Marilyn. Well, Judy, I'm going to take you to your next slide. The rulemaking
perfect.
timeline.
Yes. So where are we at? We have the Genius Act, which requires the NCUA, along with the other federal regulators that I mentioned. They're required to issue a joint rulemaking to implement the law and establish a process for approving stablecoin issuers. They're also required to establish other conditions. So things like capital requirements, liquidity standards. We kind of went over the reserves. So reserve asset diversification, interest rate risk management standards, also appropriate operational compliance and information technology risk management standards. Again, that's going to include things like your BSA, your AML, and sanction compliance. And all of this is going to be tailored specifically to the stablecoin issuer's business model and risk profile. So we have these requirements in the Genius Act. As far as the rulemaking timeline, we have last year in September, the U.S. Department of Treasury, they issued an advance notice of proposed rulemaking. They were seeking public comment related to the Treasury's implementation of the Genius Act. But more importantly, just yesterday, the NCUA, they published a notice of proposed rulemaking to implement a framework for the approval and licensure of permitted payment stablecoin issuers. And that's going to be subject to the NCUA's jurisdiction. So I want to emphasize this is just a proposed rule, not a final rule, but it's very important because it's the first step or first formal step by the NCUA to implement aspects of the Genius Act. So there's just a few things that I want to cover. I know that there's some slides at the end for those who want to review through it. It kind of goes through some of what I'm saying, but just to provide some of the high level overview of it. The proposed rule, as I mentioned, it covers the application procedures as well as the standards for becoming a permitted payment stablecoin issuer. It also includes the application framework, so who can apply, the filing process, required information such as safety and soundness documents or governance and risk management policies. So all of that is something that we're essentially digesting currently, but there's a few things that stuck out to me while I was going through it, is that in order, when you're actually applying to become a permitted payment stablecoin issuer, only one application needs to be submitted. So you also have credit unions who are limited to NCUA licensed PPSIs. So what does this mean? This means that the proposal, if it's finalized as it is, it would prohibit credit unions from issuing stable coins through a PPSI that is not licensed by the NCUA, such as a PPSI subsidiary of a federal community bank. So there's certain aspects, we still have a comment period, but there's certain aspects that we are looking at with our advocacy efforts to ensure that we're putting credit unions in the best light. The proposal also states that federal credit unions using a subsidiary to issue stable coins must do so through a CUSO. But that means that QSOs must meet certain requirements that are laid out in the NCUA regulations, such as on Part 712 of the NCUA regulations, there's a requirement to primarily serve credit union members. So it's gonna, I think I don't have the regulation in front of me, but there's requirements that could potentially place some burdens on credit unions and put them at a disadvantage to non-credit unions. So it's just one thing that we're focused on. And just a few last high-level points from the proposed rule. I know I mentioned it just came out yesterday, but we do have our regulatory affairs team who's working on a comment for this. As I mentioned, the comment period for this proposal is open until April 13th. And the overall implementation of the Genius Act is going to be split into parts. So this is essentially, in my mind, I think of it as, either part one of two, or one of five, whatever it may be. There will be forthcoming proposals which will propose regulations to implement the standards and restrictions imposed by the Genius Act. So now on to what are we doing now? There's a variety of folks doing different things. You have different stages. You have some credit unions who are already starting to build the technology and operations needed to hold or custody stable coins, whereas you have a lot others who are still asking what are stable coins, and let's wait until we have some more certainty, some more regulatory certainty. So there's not a right or a wrong. There's no one size fits all. But what I have heard is that those who are taking action now, they're doing so by partnering with tech providers, blockchain platforms, custody providers, and payment networks to essentially test integration before the regulatory rules are finalized. I don't know if anyone else has or wants to chime in on what they've been hearing, but I did recently just read an article about Visa, who had launched its stablecoin advisory practices, and that was aimed to help fintechs, banks, credit unions to essentially look at their strategy, look at their technology and operations, and work towards implementation of stablecoins. So that's just one avenue. I think that there is a wide range, like I said, and there's really no one size fits all. I don't know, has anyone else, if Marilyn or Jacob, you want to jump in, if you can speak either from experience or what you've been hearing others have been doing?
I'm not in a position to give specifics, but I would say that I think that there's additional research going on here at Self Help and our kind of interest in what the members want. Secondly, I know some of the payment processors are developing the technology and infrastructure to support this very quickly. I think that the ones that I'm talking to are concerned that some credit unions will take the time, like they did with things like contactless cards, like 7, 8 years in the process, and then kind of flood them all at the same time. And so I just would encourage folks to again be thinking about areas of value in the problems that you're trying to solve with your current member base, and try something. I mean, I think Paul, you had another question about no hypothecation. So it's a dollar backed. So it's a cash equivalent, it's fiat equivalent. So however the entity is doing it's supposed to function like cash. And so there's not like a credit worthiness associated with a stable coin in that respect. And then third, like in a lot of my other circles in small businesses, I know, again, I mentioned earlier, the growth of the interchange rates, there's certainly some tension in various governing bodies around where they are and then what POSs are adding onto that with all of the to-go online ordering and stuff that's starting to kind of make cards even more like the go-to. They're interested in trying to keep their margins as nice as possible and their cost as low for consumers, and they see this as an opportunity to lower their operating or cost of goods.
I think it will be consumers and members in particular who demand certain services be provided and certain products be provided to them. So in response to that, I think there are going to have to be some restructuring and some opportunities taken to really accommodate those interests. I mean, sort of to stay ahead of the game, frankly, and be that one-stop shopping place where you can pretty much get all the financial products that you need in one place. I think that might actually probably drive credit unions close to this sooner rather than later, just being able to serve their members in that way.
We had a question as well from Greg. Is there a list of QSOs related to this today? And if so, how do we obtain the list?
A list of QSOs for what?
Relate that are working on stablecoin that they could partner with. I guess, how do you vet or evaluate
No, I
partners?
have no idea.
Yeah, that's a great question. We don't have a list necessarily, but I think it's gonna come down to who they all, well, yeah, I don't have a list of QSOs.
So let's ask the next audience question. What would make you more comfortable exploring stablecoin related activity? We can drop that in the chat as well. Now that we've talked a little bit about a call to action, what others are doing and how, I want to toss it over to you, Marilyn, to really talk about blockchain and AML. Efficiency.
Okay. Yeah, so I'll actually extend the disclaimer that Judy provided, and no, this is not advice, and you should rely on your counsel for that. But essentially, blockchain is a decentralized digital ledger that securely records transactions. If you think of like your record keeper requirements, being able to have all of that sort of digitized, but not only digitized, but in a way that can't not be changed. It's really what the blockchain offers, that capacity. And if you think about a lot of the sort of data breaches that have been happening, it's usually because of, people having access to these systems and they're not secure. Blockchain makes it very secure in just the way that the structure of blockchain is from a transaction standpoint. So then blockchain has the promise of being able to help manage some of the cybersecurity challenges that people have. But I'm sort of looking at it from the perspective, and I'm going to go off the slides because you can read that later. But looking at from an AML perspective, and just looking at the transactions and having transaction transparency, I think that's a big challenge for some companies that are trying to, formulate their AML programs. They spend a lot of money on AML compliance, and part of it has to do with the transaction monitoring that's a requirement under the BSA. In terms of your SAR filing obligations, for example. So I think that this technology has the opportunity for you to be able to, bring in that technology. You'll be able to share it with the examiners. And the most important part is that it can't be changed, right? And then the other thing about blockchain too, in general, is the recording of information. I think a lot of companies are experiencing issues with identity theft, for example, and just account takeovers, and in particular, synthetic identity. Now we have AI and deepfakes. So this is another way too, from a BSA perspective, that you can engage in doing your KYC protocols. Are people pretty much familiar with know your customer protocols and the customer due diligence that is required under AML laws? I'd like to take a poll on that. I think most of us have had some sort of AML training. They may actually be, providing the training because they may be in that operational piece. But it is mandatory that everybody within the organization will have some sort of AML training. So that if you can think about it, one of the largest risks I think right now that's out there in the industry is synthetic identity, where people can take some components that are actually real, or maybe they in an account takeover situation, they may have access to the person's computer. They don't have good security controls, and maybe get access to their passwords that are being stored and then they can impersonate that person and gain access, or they can gain access to some very sensitive credentials too, by phishing attacks, for example. But at the end of the day, I think it's really hard with respect to synthetic identities for someone to be able to really verify that that person is real. So actually, with the blockchain, that sort of possibility, you can go to the next slide. That possibility is pretty much, eliminated. It's not like completely perfect, but I think it has a way of minimizing those vulnerabilities. And certainly with the advent of this technology, especially with respect to AI, as I said before, the fraud has grown exponentially. And the cost of fraud borne, it just keeps growing. I mean, it's so much part of the annual budget just being able to control for the fraud losses. So I think the blockchain really has a way of offering ways to sort of combat fraud prevention and through methods that are really effective. And essentially, the blockchain is going to be a centralized system that can be basically not vulnerable to breaches and fraudulent manipulation and inefficiencies. Next slide, please. So getting back to the KYC aspects of it, from a customer due diligence standpoint, the blockchain answers the use of synthetic identities with deep fakes that are produced through AI. Blockchains basically identify with their identity verifications would allow members to store their personal information securely on a decentralized ledger. And anybody, because it is decentralized, could see that ledger and have access to it. It makes it immensely easy too when you have to share that with your examiners and if you're going through an examination process, which I think actually now when we think about the age of examination staff, we've had a lot of people who were very experienced in the area. They've basically retired or maybe they've been laid off through Doge. So I know people are like having a lot of challenges in dealing with some of the newer examiners who don't have the same experience. So this will be one way to help combat that because all the data will be stored in this decentralized and readily accessible fashion. And actually, maybe they don't need to come out and do exams anymore. Maybe you can just give them the information and they can actually examine you just through your decentralized ledger. Data on the ledger cannot be accessed or altered without proper authorization, thereby reducing the risk of identity theft or fraud. Okay, next slide. As I said before, it offers these wonderful protocols to KYC and the controls that are associated with that. Overall, I think the blockchain offers certain safeguards that effectively combat financial crime, as I mentioned before, identity theft, synthetic identities, as well as fraud. Next slide, please. Okay, some of the challenges I think in adopting the blockchain has to do with scalability. Depending on, what your transaction volume is, that's always a challenge, if you have high transaction volume. Then, of course, the biggest challenge I think right now is just the regulatory uncertainty. And we're sort of like in the throes of that with the regulators, but I think we're on a much more positive road than we have been in the past in terms of we know for sure that there's an effort underway now to establish an effective framework for supervision and regulation. So we're like, way ahead of where we were before. I would say a year ago before this administration. I have to actually applaud this administration for moving the needle forward when it comes to supervision and regulation. As with any sort of technology, there's always integration problems, and usually with most sort of like payments related integrations, it usually takes anywhere from 6, possibly as long as 18 months. So that's always a factor too. And despite these challenges, I think it's going to have continued acceptance and advancement through document and regulation that has clarity with it. But in the end, it's going to lead to a much more secure creation of in the financial ecosystem. Next slide, please. So that's where we are with the blockchain, and this is, I guess, pushing it back to you.
Am I taking it from here, Jamie?
Yes.
Yes.
Okay.
Mhm.
All right. I just want to make sure. and we can take any other questions too. I wanted to add on, I loved everything that Marilyn had shared, and I think that it's just the best path to go. Some large entities are looking at alternative methods for issuing and tracking stable coins. Um, there is the public blockchain option, and I think it is the best one, but you'll probably see as individuals and as entities, groups like, Amazon, or even a bank, try to be like private issuers of their own stable coins. And um, there's pros and cons to doing those sorts of things, but I wouldn't be surprised if those type of evolutions occur. And it doesn't mean that they wouldn't use a blockchain technology. It just wouldn't be a public one in those regards usually. Marilyn, do you have any comment on that?
Yeah, I mean, I think, it just, they're always looking at ways to sort of minimize settlement risk, right?
Mhm.
So I
Yeah.
think definitely you're going to see a lot of private entities trying to eliminate that risk, especially if they're global companies. It's almost as if they're having, using the payment system as like a lingua franca, so to speak. And this would be one way to achieve that. So when you think about foreign exchange risks, you have country risks. There are a lot of risks, associated with being a global company. So I think that's, likely evolution. And then you take a company like, Circle, for example. I mean, they're global in nature. So it would behoove them to have something where they can just share the transactions. If somebody especially has a responsibility for looking and determining suspicious activity, so then they will be able to have the blockchain and be able to have access, and globally they will be able to have access to the blockchain, and they may be able to look at their operations on an integrated basis, and they may be better able to see patterns developed within that ecosystem. So I think definitely there's great utility for big companies, but I also think there are good opportunities some ways in terms of how credit unions share information. I mean, obviously, right now, legally, you can share it through 314B. Just think if you were to make these transactions subject to the blockchain, it'll make it even more immensely shareable, right? At least theoretically. So I think people will be able to pass on information more securely, and they won't necessarily have to use the traditional sources to do that, which is always going to present a vulnerability and a risk. But with the blockchain, it's very controlled, it's decentralized, and people can have access in a way that's much more secure than it has been in the past. So I think there's great utility on many fronts, frankly.
Awesome. I always like just kind of giving a leave behinds of like, okay, so what should I kind of do as an entity? And I'm a huge proponent of talk to your members. And here's the interesting thing, like they might know more about it than you do. So about right now, according to Motley Fool and some of their data research, 1 in 5 are already using it right now. And more than half of US adults who can bank are very open to it. And people of color particularly are leading the momentum in here. So if you're serving minorities, people of color, and even like the lower income brackets, these are individuals that are extremely open, very educated in this space. And so even if like you're not ready to talk to your members about it, start developing a perspective and equipping your team, your staff, with information so that when they're asked about it, you guys have a perspective that you're looking into it or you're interested in what they have to say about it. Get involved. Judy shared some amazing things today, like on what's happening. It's an extremely energized space right now. The amount of just commentary we've gotten even in the last like 6 months has been pretty impressive in this space. So just engage your attorneys, develop your perspective in there. Um, Always have a product vision, meaning like as a product guy, like I am not a shiny key guy, for the record. So and I try to get rid of the squirrels in places that people are chasing. Find the problems that you're trying to solve. There's some material, I think we're sending this out that follows this in the appendix that provides some suggestions of areas where this might provide value to your members. And it might be part of that package. It's not going to be the silver bullet that solves some of these, but it's about how are you addressing the market needs and the value exchange with them. Start talking to your service providers. I know some of the largest payment processors and all of the networks not only are starting, have been working on this and already have a position and technology in the place. And then finally, like start looking for ways in which you can test it out in kind of closed markets, and just even getting some feedback from folks, talking to your regulators about how you kind of test something in this space. Jamie knows, and other folks may know, that I'm a big proponent of an organization called Goodbye. We're not doing business with them yet, but like we are extremely interested. This is a credit union marketplace focused on small businesses and your members, and connecting to the people who believe and align to your mission. And if you think about an ecosystem where you're managing that entire closed system of like payment exchange within your network, you have a lot of room to kind of learn, provide discounts and services to your members.
I just want to piggyback on that comment, though, especially with respect to the small businesses. This is where the blockchain will be most beneficial, right? Because you'll be able to have access to transaction activity that's going to be core to your monitoring and obligations under the BSA to monitor, transactions for suspicious activity. So I think, being able to adopt the blockchain, and actually with respect to some of your customers who are small businesses, definitely would, help you do a better job of that. It'd be certainly much more efficient, and the whole process will have more integrity to it, because people can do all kinds of dummy transactions and it's hard sometimes with deep fake and AI to really get to the bottom of whether or not it's legitimate or not. But I think that if the blockchain is adopted, and it would have that kind of ubiquity in the future, then I think it'll certainly minimize those opportunities for fraud and misrepresentation that is so prone for the small business community as well. So, yeah.
I see a question in here. Rob asked, any sense of impact of self-controlled transactions to current levels of fees from ACH and other CU related initiated transactions? Not sure who this would go to, but it is
Can you
from the
repeat the
chat.
question?
Yeah, and Rob, feel free to chime in too, if you have any more specifics, but any sense of impact of self-controlled transactions to current levels of fees from ACH and other CU-initiated transactions?
In other words, we get fee income now from various transactions, but if this is all self-initiated and et cetera, are we losing a lot of fee income and having to find other alternatives for that revenue stream?
Mm.
I
Well,
don't
I
think I
think
can.
yeah, I think you can probably do more volume if you
Right.
have the blockchain, right? And so some of the, I guess if you think of some of the payments model, that's a very common model where they're doing like, huge volume, but maybe not a whole lot on the fee side. But they gain the revenue from the volume.
Right.
Yeah.
The way
Is
I
that
look at it is similar to instant payments, so like the Federal Reserve, for example, you're going to get a very like low cost to serve for an instantaneous payment, to where even like wires and same day ACHs are not competitive in this space, depending on kind of what promo they're running at the time. So there's definitely room for some, exchange rates there, or kind of even the work to kind of transfer them and make sure the assets are there. But I think this is more of like my advice in these sort of situations is think about customer retention in the long run. The payment, it takes more than just the holder, it takes the servicer too. So the exchange rate here has to work on both sides, and that's starting to open up. And so it's the humans are going to go where they can move their money the easiest. And so I would think about it more from that perspective of the total package of services that you're offering.